Hello, good evening traders. Welcome back here to Zabio Trade, to our webinar today when we are talking about mastering prop trading from rules to results, risk management and capital preservation in prop trading. This is the topic for tonight. And remember the 20% discount code with the code name Frank, and you will get for every single plan a discount of 25%. This discount is exclusive for you guys tonight. So please make usage of it and get ready for the presentation. So I'm going now and sharing with you the presentation in a presentation mode tonight. So this is what we're doing, and we're gonna do it tonight. We are doing also some trades. We are now at a stage when we can together take the strategy that we learned last week, also taking the plan that we were talking about and doing as well finally some trades tonight. And this is what we want, and this is what we're doing at the end of the webinar today. So we are first learning still about position size calculation, a little bit about risk management, how your strategy can work out for yourself, and then we are going to implement exactly this what we're learning now in the last 3 webinars. We are going then and doing the trading. Hey Harald, nice to see you here as well. Let's look about the agenda. We are talking today mainly about calculating risk and position size. I tried to get through the webinar presentation today relatively fairly quickly because we would like to take really action today and do the trading as well. So second point we're talking about is as well how you're dealing with losses and drawdowns, and how to do a capital preservation strategies for long-term success, and how important it is that you are disciplined and have your emotions under control. Emotional control is a pretty tough topic. Everybody has emotions. You will never be able to switch off the emotions completely, right? This is impossible. But you have a chance that you are getting the amplitude of the emotions minimized so that you have the euphoria phases not as extreme as it might be at the moment when you do a winning trade, but as well, and this is maybe the more important, is that you don't have the frustration phases when you do a losing trade too much. This is part of the game, and you will see as well today in the presentation why it's not to be worried if you have some losers in a row. And I promise you, over the course of what we are doing in the next couple of weeks together, remember as well, we have today a session, we have still next week 2 sessions, then we have completed all the 5 webinars, then you are very well prepared for entering in the codes in the course, which we have been ready for you very, very soon, that you can, this what we were doing now in a nutshell in 5 hours, that you can explore this as well, then detailed and having it for reviewing again and again to really like strengthen the knowledge that you gained. And then putting everything into place and trying to get your first account funded. And this is a great thing. I will promise you, you will be very proud on yourself if you are going to achieve that. So let's get started. Let's skip that one. Just be concentrated. Maybe put your phones for a minute aside if you are not watching the live stream on your phone. Just be concentrated on the content here. Today is getting really detailed at one point of time. I try to do it as simple as possible to understand, but you know what? If you have questions, you can anytime write it in the chat. I will answer them at the end of the webinar for sure. I will go through. And more important is, after the webinar, we will have the presentation from today as well online, so you can anytime come back and look as well. Harald, give me a second, and then you can always come back and look at it. So Harald asked me if I could activate the English subtitles. Oh my God, if I would know how to do that, I would immediately do it. But maybe this is something what you could do by yourself, maybe when you're going to the video. I'm not 100% sure about that right now, but maybe But I will definitely inform myself about how to do that next time you can. Definitely, what I believe, Harald, is then later on is also a good exercise for your English then maybe. But if the presentation is over, you could come back and watch the replay again, and there I'm pretty sure that the subtitles will be available. I'm not sure if live subtitling is possible, so sorry for that at the moment. But if you will take a note at what point you didn't understand, maybe come back and watch the replay, and there I'm pretty sure that the subtitle possibility is there available. Okay, good. So my name is Frank, plus 10 years of trading experience. I'm coming from the business informatics area. This means I'm very systematic. I'm also developing systems. I'm trading also algorithmic. You will today see I'm working a lot with statistics. You saw this already in the last couple of webinars, and this is actually combining the market knowledge together with the business informatics knowledge and process knowledge I gained over the last year, and this is what actually is my edge probably in the market, that I'm here very much system focused and very much like strategic or structured in the systems, and this is what's gonna helping me to stay on track with the results. Okay, so let's go and do the first question of tonight. Guys, Trace, Harald, and all the others who are online, I would like to get a guess of you. Put in the chat how much trades you think you're gonna need to get funded an account if you are trading a trading system with a hit rate of 50% and a risk reward of 1.5 to 1, while you're using a risk of 0.5% each trade. What do you think, how many trades in such a system you need to get funded? I'm interested in your ideas. Take yourself a little bit of time and think about it. I give you a few seconds now, and I would like that you just put me a number. Either you make a rough calculation in your head, you take a note and make a calculation. Just give me a number what you think, how many trades is needed, and I will be telling you this not now, but I promise you throughout the course of the webinar I will be telling you exactly what number of trades you in average will need to get an account funded. Let's quickly do a recap. The drawdown limits. This is very important for today's session. We are having two different types of drawdown limits. One drawdown limit is 5% of in a day. You are not allowed to use more than 5% in a day. If you do that, you will breach your account. Your account will be deactivated. The second limit is the 6% trailing drawdown. That means always when your account is doing a new all-time high, the 6% drawdown limit will be calculated from the highest watermark your account was doing. So this is a drawdown limit that is trailing with you. Why is like that? Very simple explanation. Of course, the broker or sub-trade does have to do risk management, because they are taking all the risk. You have only the obligation to have a plan bought, and then you have no risk because it's not your money with what you are trading. So this is why sub-trade says, hey, I give you the money, I want you to play the rules. I would like that you are a professional trader, not risking too much. I give you 5% of, let me say, a threshold in your equity per day and a 6% trailing drawdown. Okay, this is very important to understand. And this is our boundaries in which we are playing. We are not able to violate these boundaries. As soon as we touch the borders, bam, your account breaches, and that means that you are first of all deactivated for this account, and you would have to generate another trading plan, or you have to buy another challenge in that case. Okay, I get 500 as a number, so we keep that. We know that. Thanks a lot for your participation, Trace. That's a high number. Let's see how far you are off, or if you make a hit into the bullseye. Let's wait and see that. So that means, guys, we have to think now about to stay in the boundary. So if you're doing a risk calculation, first of all, start with a hypothesis, or start with a framework in which you want to operate. We are calculating with 10 losses in a row. When we are having 10 losses in a row, we would like to stay still in the game. Or, let me say, when we are having 10 losses in a row, we will breach the account. We open maximum 5 trades at once, that we can have as well an eye always that we are not risking with our portfolio our boundaries. And we try to keep every position to earn at least the risk. That means we don't touch the position until we did not earn the risk. 0.5%, which you see here, is calculated. So how do I do the calculation? The calculation is pretty simple. You take the maximum risk that you want to allow yourself is 5%. I take here the smaller number. I don't want to calculate with 6%, because if I'm calculated with 6%, I'm violating immediately the everyday's limit. If I would lose all my trades, and I would, for example, put all the risk in all my trades, right? So if I would take 5 trades, and I take not, I don't take, like, for example, not the 0.5%, I distribute the risk on the 5 trades, and I would lose them, then I would be immediately out of the game. So the formula is the maximum risk you want to take is 5% divided by the number of trades that you are trading in a maximum, right? So this is actually what we are doing. We are calculating with 10 losses in a row, and this is actually the number of trades that we would like to survive when we are losing them in a series. So if we are having a very awful losing streak, which maybe is probable, maybe not. And also here I would like to put your attention a little bit on one of the next slides. We are talking today about as well a probability, how probable it is to lose 10 trades in a row. How probable it is. This is also something what we would like to do today together still. So let's get one step further. Here from the practical side, and here's the formulas. Please remember the formulas we are talking now about. They're important because this is something what we also have to apply later on when we're opening the trades. So we need to distribute 0.5% risk of our account balance to 90 pips with the appropriate lot size. How I come to this sentence? Here I, for example, draw you a trade inside according to the strategy I was introducing you on Tuesday, that we are like opening. Always we are waiting for a cross of the moving average, and then we are trading the first pullback into the area between the 20 and 50 moving average. We are putting our stop loss far below, or an adequate distance below the 50 moving average. This is a distance of 90 pips. So this is the overall risk, and in this overall 90 pips we have to distribute our 0.5% risk that we were calculating before. So the risk amount is, we are taking our account size and multiply it with 0.5%. That means if we are trading a $20,000 account, this is 100 euro that we are risking for each trade. So, and that means that this 90 pips has to have a risk of total $100 at the end. That means to calculate now the lot size, we are taking the formula, we are taking the risk amount we were just calculating, $100. We are dividing this through the product of stop loss in pips multiplied with the pip value. the pip value for one lot is $10. So this is why we're having here the stop loss in pips of 90 multiplied with $10, and we are dividing 100 through the product. 100, our risk amount, will be divided by the product of the account size times the risk. Okay, so and this is what we are having, by the stop loss in pips of 90 and the pip value. This is 100 divided by 900 is giving us a lot size of 0.11 or 0.11. So in this moment, you are trading an $11,000 lot, or a 0.11 lots has the value of $11,000. You are here buying the euro in the value of $11,000, because when you are then going down 90 pips, you are breaching here out of the trade, because you are reaching your 0.05% risk of the account. And this is then the hard getting out of the market to protect our capital. This is very important, because if we are not respecting this, if we are not respecting as well that we are hitting a stop loss level, we are not respecting our capital. We are not respecting the capital of Savior Trade in this moment, because they're giving us the capital, and that means that we are, trading not according to our rules, not according to the process, and this is then getting more or less a gamble than a system that is based on statistic, that is based on a clear entry, on a clear exit, and on a clear take profit variant. And you see as well, if you are strong enough in this trade, then you have nothing to fear. Your stop loss is in a far enough distance. This is of course backward looking, very easy to enter into the system. So this is why you have to always a little bit as well look about how volatile this market is, how we are looking at it later on. Look at the chart, what kind of good stop loss levels you have from a structural perspective, and then just trade it accordingly. But I say it's always a rule of thumb: take a good value of distance between your stop loss and the moving average of 50. This is how much is a good value. Well, look at the chart, look what this market did before when it was violating the 50 moving average and went still in your direction, how much pips it was undershooting, overshooting the moving average, and then just place it in a good amount that you think, okay, this makes sense. You can use an ATR that you are very consistent on it, that you say, okay, one ATR below the 50 moving average, half an ATR below the moving average, or even 1.5 ATRs below the moving average, or above. It depends, of course, in which direction you're going to trade. But this is something what you can really as well figure a little bit out by just watching the chart, thinking about different ideas what you have, and then just stay strong with your decision when you're in the trade. You see, this is a trade. It's not an easy trade here, because if you get in here with this first candle that touches, it's an incredible amount of candles that you have to stay strong, because you go into profits, you go in loss again you get into profits, you get in loss, you get in profits, far in profits, and again into loss, and then comes the real push to the upside. And if you are strong enough to keep here through, even when you have here probably had already one-on-one risk reward, if you move break even, you are out of the trade, you will not earn anything. If you are having a little bit of trust in the system, if you have trust in yourself, if you stand to this, what you know, what you can do best, then you get as well rewarded for this. Of course, it can also happen that you were far in profit, more than one-on-one already, and then you get stopped out if you don't move the stop loss. But if you move the stop loss, you earn nothing. And this is always the trade-off that you as a trader has to do. And this is why rules is important in your trading plan. You have to make the decision how you want to get out of the market. There is no best. until you know your statistics. Then you can say, okay, this exit method is better than the other one, but you have to test both. And to be very honest, when you're doing the back testing we were last Tuesday talking about, if you didn't have seen the session, please go back into the video and watch it. Because if you do a back test now and you say here, for example, hi, this is a really good trade, I never would move the stop loss, right? But then in the next trade, when you see like this and you would get stopped out, then you say in the back test, yeah, here of course I would move of course to take the stop loss to break even. No, this is not how back testing works very well. You have to be consistent. Either you move the stop loss when you are one-on-one or you don't move it. That's all what you have to follow. Be consistent in this, what you plan. In other words, say what you do, and even more important, do what you say. And this is exactly, they're not searching in the past, here it would have been good not to move the stop loss, here it would have been good to move the stop loss. No, this is not how this is working. This will be in the reality, you will never reach the backtesting results. You even don't get close to if you operate like that, because you never know, and nobody knows that, if the market is making this move to the upside, or when it reaches back here and you see as well it's even a lower high, there is just missing a lower low that we have a downtrend. So you don't know if this is not moving and killing your trade by hitting the stop loss. But everybody's choice. Test it and you do this what you think is better. Another option would be you say, I only go with one-on-one, so then you take profit and you're satisfied and you hit and go on to the next trade. That's also a possibility actually that you can easily do. Having that said, we're closing now here the risk calculation, the position size calculation, the risk management, and here is now as well the chance for you guys to make usage of this offer that we are having here in the webinars. Go here to the website, use the code Frank, get 25% off of every single plan, and it's not for the pro plans to be said, it's just for the single plans, not for the multiple accounts, but here the single account plans, you get 25% off and have here a great deal. Good, let's go further and let's come now back to the question that I had in the beginning. I asked you, how many trades do you need to get funded if you are trading the system with a 50% hit rate and a risk reward of 1.5 to 1, and each trade you are using a risk of 0.5%. How many trades are needed to get funded in such a system? I got one answer with a question mark. Trace was giving it. Maybe there is still another traders now in the chat who wants to give us a feedback on that. Who wants to give me a feedback? I want to guess. There is no right or wrong. Yes, there is right or wrong, but it's not important. Important is that you have an idea. Important is, and if you have an idea that is far off, then I can tell you how you can get closer to the real number. So let's get started and thinking about it. 500 is the answer I got. Is 80. You need 80 trades approximately to get funded. And now you can also calculate, for example, how long you need to get funded. If you take 10 trades a day in such a system, it needs 8 days. If you trade 1 trade a day in average, it takes you 80 days. If you take 2 trades a day, 40 days. It's very simple mathematics now, right? If you have a system that delivers you 50% hit rate with a 1.5 to 1 risk reward and a risk of 0.5% each trade, this is the mathematics behind. With this you can calculate. If you need at the end 78, 75 or 85, 90 trades, okay, this is then a variation. But approximately around this number you are able to get your account funded, because we were like calculating our risk in that way. And when I go to the next slide later on, I will tell you as well how probable it is that you get through this system to get funded with such a system. And to be honest, to find a system with a 50% hit rate and a risk reward of 1.5 to 1, I think is something that is doable to get a system like that. And the rest is risk and money management, what we were talking about today already. So what are the key calculations? You need to first of all calculate the risk per trade times the risk reward. And this is like you have a 0.5% risk and you are getting 1.5% rewarded. And this is like a profit of 0.075% if you're going in a winning trade. The same you do for a losing trade. This is the 0.5% risk. Then you need to calculate the expected value per trade. The expected value per trade you are calculating by taking your win rate and multiply it with the profit per trade. The profit per trade we were calculating here in the first calculation. The win rate we are having with 0.5% given, 50% hit rate. And then you deduct from this the win rate, 1 minus the win rate, so 50%, and multiply the 50% with the loss per trade. So you have here two products in the calculation. One is 0.5 times 0.75 deducted by 0.5 times 0.5. So you're getting here a calculation and an expected value of 0.125% for each trade. Why is this important? It's important because you are the number of trades. To calculate them, you need your target profit, which is 10%, right? This is to get funded. And then divide it by the expected value per trade. The expected value per trade means that you are advancing by every trade what you are doing. And this is the key message. By every trade, by the loser and the winner, you are advancing your account in such a system by 0.125%. And at the end of the day, you need to accumulate as many trades as possible to get to 10% profit. So if you are dividing the 10% profit you would like to have by the expected value per trade, you are getting to the number of trades needed in such a trading system. And this is something that is very, very much important to understand. So let's get to the next question. What is about the probability of losing 10 trades in a row if the win rate is 50%? This implies a loss rate of also 50% for each individual trade. Assuming that each trade outcome is independent, the probability of 10 consecutive losing trades is calculated as follows. We are taking 10 losses in a row, and this means we have a loss on the trade 1 times the loss on the trade 2, and so on and so on. And this is calculated then always with a probability of 50% or 0.5. So you have a multiplication of 10, 0.5 times or exposed to 10. So 0.5 times 0.5 and this 10 times. And this is at the end giving you a probability of 0.097% probability that you are making in such a system 10 losers in a row. This is not zero, and this is not going towards zero yet. This is actually a very, very low probability. But even if it's a very low probability, it can happen. Of course it can happen. but it's very unlikely that it's going to happen. So if you are following your rules in your system that has these parameters I shown you, and you can use these formulas I gave you today to calculate your probability of a losing streak with your data. So use your trading systems that you collected or that you are trading and put your data into the formulas I gave you tonight, and then you can calculate how probable it is that you are getting a losing streak of 10 trades, for example, if you want to get funded. That means that you, by such calculations, with such a preparation, you are gaining confidence whether you are going to get an account funded, or if you maybe have to take the risk a little bit lower, or if you have to calculate with a higher losing streak. This could give you a lot of insights in how successful you might be by going with the challenge. I know that the system I'm gonna trade tonight has approximately this statistics I've shown you. Is around, it's always around between 48% and 53% hit rate I'm gonna get. And with a risk reward that goes up to 1.8. So it's roughly in the ballpark that I gave you tonight. So with this calculation, the probability that we get an account funded is relatively given. Will it happen? You can observe, because we're gonna place the first trades tonight, and we will be in the next webinars observing how these trades are going, and we're trading just exactly according to the plan how we did the trading system. And I'm trading actually the sentiment system. So, conclusion of that is the probability of experiencing a losing streak of 10 consecutive trades in this system is approximately 0.0977%. While the probability of such a long losing streak is low for any specific sequence of 10 trades, it's a possibility to be aware of, especially when executing a large number of trades. So if you are going to get an explosive number of trades, of course the probability number, even when it's low, has a chance to get happening, right? So maybe also think about quality of the trades and not only about the quantity to get the 80 trades done very, very fast. That quality of the trades has to be given as well, so that you are picking trades that makes the most sense. And this is as well why we're always referring to that proper risk management is very crucial to withstand potential losing streaks. Once more, for you the opportunity to run out to the SabioTrade website and choose your tariff for the single plans and getting a 25% discount by using here the code, which is my name actually. Talking still about the psychological aspect, because this could kick your whatever it means, make a word out of it. The psychological aspect of trading is a critical one. You can get into fear that you're hitting the drawdown limits. You might get hesitant to execute the trades because you're afraid of hitting the limit. You can get feelings like you would like to take a revenge. You would like to recover immediately all the losses you did. And this can even lead to bigger problems. It can accelerate your drawdown even, because you take now emotional decisions. You don't trade anymore according to the system. You don't wait anymore until a signal arrives. You just try to recover. And if you do that, be sure about that all the statistical topics we were talking about tonight are not valid anymore, because you do something totally different then. And this is exactly the problem why such a psychological aspect might really kick everything into the garbage, what you build yourself up very, very hard. You might imagine you the picture of an elephant going into a porcelain shop, going inside is a very big animal and just turning around and is destroying everything what was built up by just turning around. It's a very, very bad thing that could happen. Revenge trading is very, 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 very bad thing. But it's nature. It's for a human being very natural. So if you have this feeling, don't think you have it unique. It's I think 80-90% of the traders are having this. And maybe even 100%, and the 10% who are not doing this anymore, they can control it. They have a method for how to not do that anymore. But this is something what is very, very important. And by this even it happened to many traders that within seconds, minutes, within a few minutes, they killed the complete capital of an account. Because they were losing, they could not stand it, and then they wanted to recover, and so on and so on. It's not always possible to recover immediately. It's not always possible. Market volatility might be out, no signal is there. Wait for the next signal. Wait for the next chance. You know exactly the numbers now, what I have given you. 10 losers in a row, very unlikely to happen in your trading statistics with 50% hit rate. So trade the next trade. Trade the next trade, and you will see that you get and if the next trade's losing again, well, then you trade the next trade again. Because you know from your calculation, from the calculations now, how many trades in a row are probable to happen. No need to make a revenge trading. Stick to the numbers. Very important. And this is also something what we call to call discipline and controlling or managing. Maybe managing is even the better word for emotions, managing them. And keep the discipline, sticking to the plan, manage the emotions, crucial for long-term success, and avoiding drawdown breaches. Remember, we were calculating now from a risk management perspective that a breaching of the account is unlikely to happen if we keep the system and if we keep the rules. Unlikely. I don't say it doesn't happen. Unlikely to happen. And of course, develop a resilient mindset, understand that losses are part of trading and focus on learning from them. But guys, if you trade a trade and lose a trade that you followed all the rules, you just can learn for your psychological behavior in this moment. You don't need to trade, you don't need to change the strategy, you don't need to make a bigger stop loss, you don't need to go crazy because of that. No. Learn for yourself that this is part of the game. Remember, the expected value, 0.125% for each trade if we are winning or losing. Think about this number. I know it's hard when you don't get the cash on your hand, but the winning trades are coming back. And you will also get winning streaks, because what is counting for winning streaks in the statistics also counts for losing streaks, counts also for winning streaks. So stay patient. Stay patient and learn to control and manage your emotions and sticking to the rule. Now I give you still some solution. And this is you. You are the solution. You're the solution for this whole thing. Calculating the risk, sticking to the rules, trust your process, know the process, how you're going to trade. Very important as well, trust in yourself. Trust in yourself what you are doing. I mean, you did a lot of work probably already to learn the trading, to learn a strategy, to learn how to execute it. Trust in yourself. Why you should not trust in yourself? There's nothing better to trust this what you're doing, if it's according to the process. And take it like a sportsman. It's like a business. And in a business are hard phases and there's better phases. And be fair, the market, at some point some other people also want to win. So you might be having a losing phase in this moment, and then the game turns around again when you're just staying motivated, when you're just staying disciplined, and if you really develop the absolute will to succeed. This is very crucial, because it's very, very easy to give up in a situation when it doesn't work well. And it's very easy to do the most mistakes when it's running very, very well. So keep both sides a little bit under control. Try to manage it. Try to manage when you're getting over euphoric, and try to manage as well when you're getting too much frustrated. Success is not a luck. Sometimes luck comes to it when you start to get really very, very much sticking to the rules, sticking to the process. Luck comes automatically, but it's not luck to have success. This is a result of your hard work, blood, sweat, and tears, and the absolute will to succeed. And now, guys, we are going and trading. If you have no questions. Now, while I'm preparing the trades, you can go ahead and ask the questions that you are having. If you have no questions, that's also fine. But if you have questions, put them now into the box and into the chat box, and I will answer them to you. And in the meanwhile, I'm taking out the sentiment trading metrics, and we are looking at some markets and looking if we are having maybe some interesting signals for today, and taking also some trades exactly according to the rules that we were talking about. So this also will be the last part of the webinar today, by opening the trades. And these trades, of course, we are keeping open according to the rules. So I will not touch the trades until I have not reached the risk. Then I will be trying to keep the trades as much as I can, but I'm starting to manage the trades when we are reaching one risk earnings. So if I'm taking 90 pips a risk, if I'm reaching 90 pips, I start to manage the trades. From this moment, I'm allowed to take it off. But remember, I'm striving for getting a risk reward of 1.5 to 1. So that means I'm trying to let the trades in the system as long as I can to get as well the maximum out of it. Okay, so this is the system we're gonna trade. I'm explaining you again once more the strategy that I'm taking. So when I'm looking here into the metrics, let me bring this in a big picture. You are seeing here 9 markets. We have Forex inside, we have indices inside, and we have 2 commodities inside. What we are seeing is that according to the sentiment, we are seeing here a zero line in the middle, and the zero line is representing 50% buyers, 50% sellers. If I have more sellers in the market, the line is moving below the zero line, right? This oscillating line is moving below the zero line, then I have more sellers in the market. The opposite is true if I'm having the line oscillating above the zero line, then I'm having more buyers in the market. And as a sentiment trading strategy, what I'm going to do is I'm trading against the majority of the traders. So if I'm seeing I have too much sellers in the market, I'm going to buy this market. So, and for example, today in the oil market, we saw a big dive into the absolute extreme area. And if this is going to happen, so this is, for example, a trade I want to take today. I want to take a trade in the oil. I want to take a trade in the DAX, because here we are reaching very extreme levels. And then we will be maybe finding in the euro, New Zealand dollar, I'm also going to trade in the long direction. So this is the 3 trades I want to take today. Why? Because we were here crossing the line in a very extreme selling area that could be a start of a growing market. The DAX didn't do that yet, but it's about to do it, and the euro New Zealand dollar did it actually the same way. So I'm trading contrary to this, what the majority of the traders are doing. In this market, for example, we are having a sum of minus 60%. That means that if I'm discounting the buyers from the sellers, then I'm getting the result of minus 60. And this means that I have 20% buyers in the market and 80% sellers in the market. This is a very, very extreme positioning into the short direction. And as the majority of the traders is wrong, I'm taking the opposite position. So, and then for the trade planning, we are going in the system and opening us here, it's already open. Then we want to see still the German index. We are opening the German index too. And we would like to still trade the euro New Zealand dollar. So let's go and start, for example, with the Euro New Zealand dollar. What we want to do here is to trade this market to the long direction, right? Because we have such an incredible amount of sellers in the market. Today with the ECB decision, it was dropping. Let's check the chart here from the daily perspective, and you see that we are having here actually an interesting upward trend on the daily chart. We were now coming back and retracing quite a big amount, and maybe this is a good chance to have a very nice entry, because look, we don't need so much of a stop loss, and that means as well we have to calculate here now from 190, 150. Let me open the calculator. 190 let me check where we are right now, at 0115, and our stop loss, we're taking a good amount here below, is like minus 180. Let's take it here at this area below the spike here. I would like to position myself below the spike. 187.66. 187.66. So we are having here a 249 pips stop loss. So now we need to remember back the formula that we had said before. So we would like to risk 0.5%. This is $100, right? So if we go back to the slides and look again into the formula once more, then we see that we have to calculate the risk amount. So $100 divided by the product of stop loss in pips, 240, divided by 10 is 24. So 100 divided by 24 is, we can trade a lot size of 4.6. which is 4,000, 0.04 it would be. Let me check this out. Okay, so then we're gonna buy, and we're maybe closing at a loss at, and here you can as well calculate it once more. So this is calculating for you as well. So to control it, we said 187.66, and we are buying at the price right now, and then we can here give ourselves the quantity of 4,000. Can go here with a quantity of 6,000 probably around. Then we have a risk of $90. You see the loss will be $90. So we can take here 6,200 97. See, now it's a 97, and this is what we can then and go for buying this position. You see the stop loss is placed here at 96, and this is, for example, the first position that we are taking today. The next position that we're gonna take is in the DAX. There we would like to buy as well, because the sentiment is also showing us a possibility to do so. Here we have to orientate ourselves a little bit on the candlesticks. So here I would be putting my stop loss on 20,848. I would like to buy this as well. I'm closing at loss with 28,800. And if I'm trading with 0.01, I would have a risk of $5. So what we could do is here, we could probably take here of is a little bit too much, so we take 1.5, 0.18 lots, and we go and put the trade in the system. Next position that we want to take a long on is the oil market, going on a daily chart as well. This is also an interesting market. So here I would be putting my stop loss at 59.52. 59.52, and I would be going here with 20, maybe 22 barrels. I would be buying here, and now as well here the stop loss is laying. So you see that we are risking now in this very moment in total approximately $300 from our capital, from our account. And this is absolute alignment. So what we could do is we could lose in total $1,000 to get breach the account, and we are keeping this under control. We are open now 3 trades because we had signals. When I'm recapturing this very quickly, because we have in the Euro New Zealand dollar, we dive again down below in the extreme area. So that means too many sellers, we go for a long. The same is going to happen in the DAX at this very moment, and the same happens as well in the oil market. And these 3 signals that we took today, and by that we are having our first 3 trades open, and then we are just managing. Our risk is under control. We are managing now the risk and waiting what is going to happen in the trade. So when we are meeting again on Tuesday here after the Easter weekend, then we will see what's going to happen with our trades, and probably we are having already then the next trades, because remember, we can always have 5 trades in parallel open. So 2 positions in our portfolio are still left open, and probably we will have another 2 trades to fill. Maybe one or the other trade is already in profit. Another one might be a little bit in loss. We will see. And I would like to thank you now again for participating here in our webinar tonight. I'm hoping to see you back in a few days on Tuesday after Easter, when we are talking about the next position, the next steps in our prop trading experience. And I'm looking forward to welcome you everybody next Tuesday. Thank you very much for participating tonight, and see you on Tuesday. Bye bye.